Hi, welcome to Investing Channel. My name is Gaurav Sharma. I'm an independent oil market analyst and I write for Forbes, Rigzone and various other market publications. Now today we're here to talk about the oil market and what we can expect over the next 12 to 14 months. And for all intents and purposes, if we look back at 2019, it was a pretty interesting year. We had oil prices sort of go up and down, but the overriding theme, as you can see from the chart there, is that they remained fairly range bound. And I think the main reason for that is, and I still maintain that there is quite a lot of US oil and non-OPEC oil out in the market. So what that has done is basically create a buffer. So each time we have a geopolitical incident, and the most notable one of 2019 was the attack at Abqaiq on the Saudi Aramco facilities. Now, if you look at the chart and you look at the flag end of the chart, the oil prices rose in response to that. But that rise, that sort of geopolitical spike, is nothing compared to what we were used to seeing as recently as 5 to 8 years ago. Now, if you look back at 2012, oil traders used to tell me we'll have a $10 premium on the oil price at any point in time. Now that there are American barrels and American production continues to rise, it is likely to touch 13.1 million barrels per day in 2020. We have this buffer production, and that not just from the Americans, Brazil, Guyana, Norway, and so on and so forth. So that has sort of reduced OPEC's prowess to control the oil price. It's trying hard. It introduced a cut. But all that cut has done, or rather did in 2019, as you see, is to maintain the price within a fairly predictable range, sort of a 65 to 75 if you look at Brent as a benchmark, and sort of 55 to 65 if you look at the West Texas as a benchmark. Is there anything in 2020 that I see changing? Well, OPEC is in a spot of bother. And if you see the OPEC basket and the way it has reacted over the past few years, what we've noticed here is that the heydays, the days of three-figure oil prices are well behind us, for the simple reason that there is less of a call on its crude. Much of the American crude, which especially light crude, is heading to East Asia and Asian markets, and is kind of displacing OPEC's crude and OPEC's barrels in those markets. And those barrels then have to compete elsewhere and go elsewhere. And that has served as a correcting mechanism. The year 2020 started with a bang, not least for OPEC, but a whole host of players. And OPEC basket will react to where the price goes in 2020, but I see it's staying fairly range bound. Now in 2020, what we saw was, towards the flag in 2019, the Americans took out an Iranian general, obviously provoked a response from Iran. That response came and went. We saw the oil price spiking yet again, and in the case of Brent going as high as $74, but immediately coming down. And that, to me, suggests that the oil market has learned to live with geopolitical spikes. Moving on from OPEC, if you look at the market in general, I think what we are seeing here is we're on the cusp of some profound changes, particularly on the supply side. But as for spread bettors, we shouldn't really, and for people taking a punt on the market for the next 6 to 12 months out, we shouldn't really obsess too much about where the supply is, but rather look at the demand. And there's still severe demand concerns. I see demand growth rising somewhere between 1.2 million barrels per day. And what we'll see here is that the demand concerns, such as the correction in China, the aftermath of Brexit, and where we go from here will weigh on the oil price too. You look at the supply side, surplus barrels, you look at the demand side, some uncertainties, and what you find is the oil price oscillating in the modest middle. For Brent, I still maintain it will be somewhere between $68 to $75, and for West Texas, somewhere between $58 to $65. Thank you.